All right, we are back. Welcome back to What the Fick, everybody. I am Spencer Israel, joined as always by Ian Cully, head of fixed income, commodities, and currencies at All Star Charts. Mr. Cully, glad to have you back.
Feeling good. Glad to be back, Spencer. Glad to see you, buddy.
Excellent. Excellent. Glad to see you as well. Okay, so some housekeeping first. We still have on our plans to do a mailbag show. So that we talked about doing this a couple weeks ago, and then a couple things happened, and then people were sick and blah blah blah, whatever. Anyway, this Friday we are going to do a mailbag show. We don't take a lot of questions, or we don't do a lot of Q&A on this one normally. So if you have a question about anything, currency, commodities, bonds, whatever, rates, dollar, gold, corn, whatever, email us. Okay, the email is on the screen there. It's at the bottom. questions@stockmarketmedia.com. We're going to do an entire show about Q&A, just devoted to Q&A on Friday. We already have several questions in the bank, but we're looking for more, as always. So email us your question about anything. We'll address it on Friday's show. Now, that being said, let's talk about gold, Ian. If we rewind the clocks back, 6 months, maybe a little bit less than that. We were wondering, is this it? Is gold breaking out after all these years of waiting, gold doing nothing? Gold breakout incoming. Everyone hold on to your hats. Not so fast, right? Not so fast. We thought we had to break out. Then we had a few months of digestion. Then gold started to look a little bit weak. And then we got last week. Last week, gold just ripped higher. So let's pull up a chart here and let's talk about this. What's going on in gold?
Gold futures reclaiming a critical level of former support around 1910. It also coincides with a key retracement level. So, gold bugs are stepping in. They're supporting higher prices. And it looks like gold's breaking out of a tight multi-day, a little 2-day, 3-day pennant here. And breaking above the pivot highs from earlier this week around 1945. Excuse me, that's last Friday's highs at 1945.90. I think we can trade gold long above this level. I like it.
Okay. So let's, I think it's been a while since we talked about gold on the show because there hasn't been much to talk about other than that breakdown, obviously. Let's rewind the clocks back like a week or a week or two. If you can just sort of maybe ignore the price action from the last week or so, what was that weakness telling you at the time?
At the time, it was sideways to lower. And, the big level that I've been watching, we've been talking about, it seems like for the past year or so, is those former 2011 highs around 1923. Like that was the line in the sand, and it still is. Yeah. And we lost that level. Gold broke down. Yeah. Gold broke down a couple weeks ago, then found support at another logical area here, highlighting a key retracement level from its multi-year range around 1830, 18 and a quarter. It dug in there and it's just been ripping higher since. And it found support at that key retracement level as it was hitting its lowest 14-day RSI reading since 2015. Maybe we get a big reversal here. But again, it comes back to like, what levels are we going to trade against?
Right. And so that's the question. The real question we're asking here is, should you be bullish gold now in light of what has happened in the last week or so, right? This obviously, like you said, we bounced off that level, we've reclaimed another level, and so that's the question: was this a false breakdown, or is this just I don't want to call it a dead cat bounce because that wouldn't be quite what it is, but is this just a bull trap? I don't know.
Or like a hard retest, or a bull trap. Yeah, another bull trap. I like that. I think we answer that question with that 1945 level. as long as it's above 1945, it's a failed breakdown, and you want to be long, targeting those former all-time highs around 2089. But maybe this is it. Maybe this is that spark that will ignite the next major run here in gold and precious metals more broadly.
All right, 1945. Above that, you're bullish. Below it, you're not. Is it that simple?
It's that simple. Below that,
Okay.
I don't want to have anything to do with it. Below 1900, below 1910, gold's struggling. Gold's struggling.
Yeah. Okay. All right. Though that's in the futures, though. What about some other instruments here?
GLD, the level is 185, 185.50. Those are the former 2011 highs from the prior commodity super cycle. But zooming in, as long as GLD is above 175, I like it long. Very similar.
Why do you get 175?
I'm looking at the pivot lows from earlier in the year. The shelf of lows reclaiming a former support level that turned to resistance. Didn't really act as resistance. Price ripped right through it. So I like it as long as it's above that level.
Yeah, it looks like it just gapped right through it.
Yeah, and you see a lot of gaps on GLD because it's rooted in a market that trades practically 24 hours. So when it opens, prices obviously already moved. That's why you get all these gaps in here. But.
Yeah, right. Okay. All right. So 175 is your sort of line in the sand for GLD. And they're all these charts pretty much look the same, obviously, right? Because they're all trading off the same fundamental market. So it's really just a question of finding the level that's your line in the sand. And right now it's, I guess how easy is it? How pronounced is that line in the sand to you? Because like sometimes you have a level that is like, this level is one of 3 or 4 levels that are important. Other times you have, nope, this is the only thing that matters. This level is the law. Which of those scenarios is that right now?
This is the level.
This is the level.
This is the level. Bigger picture, structurally, the levels, those former 2011 highs. That's the level. Now, tactically, managing risk, trading, in the moment, right now, on the right side of the chart, it's 1945. Like I don't want to be long gold below that level. Maybe give it a little bit of room intraday, but on the close, if it's below 1945, I'm just not interested. Below 1910, you might even want to think about shorting it. But that depends on your risk tolerance and your strategy.
Right. So you wouldn't be super freaked out if gold traded below 1945 intraday, but closed above that, right? Because the closing price is the most important price for you.
Exactly.
Right. Okay.
Exactly. And it's constructive to see what's going on with silver. At the same time, silver, great performance last Friday. Up, a little over 4% in that single session. And it looks very similar, right? Reclaiming a critical shelf of former lows right around 2220. Now that was the level looking at the continuation chart. What was really interesting is that last Friday, when we look at the December contract, the December contract on me right here, 2280 was the level in the December contract. And that's exactly where price found resistance on Friday. It has now reclaimed that level and is trading just around, what are we looking at? 2303. So, I like silver as long as it's above that level. As long as it's above 2280, I like it long, back up towards 2650. Again, maybe this is it. Yeah. Maybe this is that little spark that precious metals needed to really get going. SLV 2050 is the level. Above 2050, like it long. And here's the silver futures zoomed out here. Maybe that was just a failed breakdown. There's another failed breakdown on this multi-year support level going back to 2020. We'll see.
How come this isn't a fun chart, right? So the support level, in your opinion, did it hold right there or not? Because clearly it fell through it, right? But only for a brief time. So how do you think about that support in that instance?
Oh, that it held. Absolutely, 100%.
Yeah.
I do. Yeah, definitely. I like that. And you can see, look at the last time that it broke below that level earlier in the year, in the spring. It was February.
I mean,
It absolutely ripped in the opposite direction after reclaiming this critical level around 2150. And I've noticed intraday this 2141 level getting a lot of attention. So it's significant. The market has proven to us over time that this is a significant level. And I see, you know, like I said, as long as it's above, you know, the front month is above 2280, I think this thing could rip.
but it also spent a pretty good amount of time below those levels and below that level last year, right?
Yeah,
So
last year was very interesting, wasn't it?
right. So I guess like, how do you think about that? That whatever 21 0.4 level, because it sometimes it holds, sometimes it doesn't hold exactly, sometimes it doesn't hold at all.
It has held more often than not over the past past 3 years, and it's continuing to hold. And I think that's the biggest piece of information is that it held again, and this is, you know, the market again conveying critical information. This is a level we want to pay attention to, and as long as price is above it, I'm gonna have to give silver the benefit of the doubt. Don't have to own it. You don't have to own it, but you can't be short below 21, above 2140. I think it's that simple.
Is there a world where either gold or one of gold or silver continues higher and the other one doesn't?
For brief periods of time, sure. I think over the long run, no.
Yeah.
And you know, if gold is continuing to catch higher without silver, that's usually the signs of a weak rally, a lack of risk seeking behavior within the precious metal space. I've got a couple charts with that right here. Just looking at the silver gold ratio really highlights that relationship. If silver is not participating, if silver is underperforming gold, gold doesn't tend to do well. And if it does reach new highs like it did earlier this year into May, if it's not supported by healthy risk appetite and silver's participation in the rally, yeah, it doesn't continue to catch higher, right? Chopping sideways.
So silver. So at the moment, gold is outperforming silver, and at least that's what that chart shows to me.
It's silver. Yeah, I mean, off of the July high, the trend is still lower. Near term, the line is slightly higher. So silver, yeah. So silver is outperforming gold off of the near term lows.
But in the intermediate term, gold is outperforming silver.
Yes.
Yeah. Okay. And that's what you.
And that's the thing. That's bigger picture. Bigger picture, Spencer. We really haven't seen any significant risk-seeking behavior re-enter this market.
When you say
has not changed. A lot has not changed since a couple weeks ago. And while we have levels that we can get long against and catch this potential, you know, fail breakdown and rip higher in silver and gold, you know, rates continue to rise.
Yeah.
Right. Rates continue to rise. The dollar continues to rise. I mean, until one of these either just stops going up or begins to roll over, gold and precious metals, you know, more broadly are going to struggle. They're just going to struggle. You know, even as impressive as this chart is, here we have the US 10-year real yield inverted, upper pain, gold futures lower pain. I mean, real yields have been absolutely ripping. Gold's been hanging tough. But that's impressive. Regardless, if real yields continue to fall, gold's not new all-time highs for gold, highly unlikely in that scenario. And it's the same with the dollar. It's the same with the dollar. And we need to see this, the lower line here. It's the dollar index inverted. We need to see this lower line catch higher in support of gold. That means a weaker dollar. That's not what we're seeing right now. We're not seeing a weaker dollar. In fact, dollar looks pretty good. Just broke out. Dollar just broke out above 105.50, pulled back twice to that level and has found support. Former resistance turning into support, polarity 101. Looks like it's catching higher today. So, I mean, there's, bigger picture, nothing has really changed. Bonds continue to sell off. That trend hasn't changed. Dollar continues to catch higher. I don't see these trades working. Nevertheless, we have critical levels, well-defined levels that we can define our risk and trade against.
Just to clarify what you said a few moments ago, you said we haven't seen risk-seeking behavior. Quantify what risk-seeking behavior would mean for gold and silver in this context.
Silver outperforming gold. So this would mean I can quantify it in terms of looking at the silver gold ratio. I mean, I want to see the silver gold ratio take out, the pivot highs from August.
Risk-seeking behavior is just another way of saying the bulls are in control. Markets are going up. That's all.
Money is flowing into the precious metal space. Yeah, exactly. Into areas of the precious metal space that carry more risk, like silver. Like, small mining companies like Seabridge Gold. What's really interesting as we look across, all the individual miners, there's a lot of charts where the buyers are coming in and defending the former lows from last year. So you had new multi-year lows a couple weeks ago, right? Gold's breaking down, silver's breaking down. Looking at the miners, they're making new multi-year lows, undercutting former shuffle lows, much like we're seeing here in SA. Now, those lows have been reclaimed almost across the board. That's constructive. So there's a lot of levels to trade against here for in the precious metal space in terms of the mining stocks. Alamos Gold, as long as, I'm not ready to get involved in this name above 1150. It's been a great stock. It's holding up. It's one of the better names out there. I think if it's above 13, I love this stock long. Let's see if it gets there. BVN, another good name. Not a lot of mining stocks have held up this well over the last few months. It's a great looking name, above 875, like it long, up towards 17. Potential resistance coming in here around 10, but above 871, 875. Like it back to
why did you highlight these three gold miners in particular? What's they just have levels that stick out to you?
Buenaventura's been a near-term leader, a very clear level to trade against. Alamos Gold has just been it's been a favorite. It's also in the leadership group. And then Seabridge Gold really highlights what the scene in the precious metal space right now is. A lot of former support levels have been reclaimed in the past week, which, and we'll have to see. We'll have to see. I want to again that former 2011 highs. That's been the level. I've always said, as long as gold's above that level, I have to give these assets the benefit of the doubt. I got to give these assets the benefit of the doubt. Plus, they're giving us clear levels to trade against. However, there's always a however. There's always a but.
Yeah,
and the but is, rates in the dollar continue to rise. And in this environment,
it doesn't sound like you're bullish. Yeah, it doesn't sound like you're bullish, even though you're saying
these assets should struggle.
Right.
But if they're not, I'm not going to argue with price. I'm not going to argue with price. There you go.
I mean, like, it doesn't sound like you're bullish, even though you have very defined levels at which you can buy gold and have a defined risk, or buy silver and have a defined risk. And you've said, even though you've said above those levels, you give the benefit of the doubt. You don't exactly sound like you're pounding the table on gold and silver here. I mean,
well, let's be honest. It's going to be hard to pound the table on gold until it hits new all-time highs.
That's true. I don't know.
There's still a lot of overhead supply up there.
Yeah. Well, yeah. I mean, you were arguably pounding the table on it back in May or whatever, April.
Yeah, we're approaching new all-time. We were approaching former all-time highs.
Mm-hmm. Yeah.
Right. I mean, that's but again, gold found resistance, and that resistance is still in place. So.
Still, though, I mean, what were you thinking last week? Gold had its best week, and I don't even know how long, right?
Show me. That's what I was thinking last week. Show me. And back above back above 1945, and that's it. That's that, and it is today. So it's that's why I say the environment, bigger picture. It doesn't look conducive to a sustained rally in gold, and that does not mean we can't get it. And that's the message here. So above 1945, long gold, above 2280 in the front months for silver, December contract, long silver. See what happens to rates and the dollar. Maybe they start to ease up a little bit, and maybe sideways for the dollars is enough for gold and silver to start ripping. We'll see.
I mean, the dollar has stopped going up for the moment, right? Just for the moment, but it's not exactly going down either, right? So
no, and it kind of makes sense because both the pound and the euro are pulling back to big levels. So to see the pound and euro find some support here in the coming weeks makes a lot of sense, and that should slow the dollar's rally, at least the dollar index's rally. Yeah,
we can only hope. As someone that likes it when risk assets like stocks go up, and that's obviously in order for that to happen, you need a falling dollar. So. I'm rooting, right?
That's the way it's been for the past 5 or 6 years. Yeah, 7 years.
Right. So yeah, I'm rooting for the dollar to fall so that my stocks and your silver and your gold can go higher, and then we can all go into the new year happy. Is there any yeah, what's up?
Do you still have the sugar? You still have the cane
position?
No,
dude, I sold the cane. You know why I sold cane? Because I want to make money this century.
Okay? Oh, come on, man.
I want to make money. I want to make money this century, and it is so slow. I couldn't take it. I held that thing for I don't know, 2 weeks, maybe 3 weeks, and what did I make? Like 20 cents, 30 cents, something like that. I don't know. Like
you're gonna get a few bucks here soon.
It was like watching paint dry, honestly. So no, I sold cane. I mean, yeah, like you called the breakout. It did break out. It's still breaking out.
It's gonna go. Get back in there.
It's gonna go. Well, yeah. Wow, it's about 15 now. What was I going to say? Is there any end of year like seasonality that pertains to gold and silver?
Yes.
Good
I
or
believe
bad?
we're
Good or
entering a
bad?
bullish period for gold and silver.
All right.
I
That's good.
believe
That's good.
so.
That's good to know.
Not putting a lot. Again, I don't put too much into seasonality.
Yeah. For the metals. Yeah.
For the metals.
Yeah. Okay.
But yeah, I've it's bullish.
All right. All right. So takeaway here is if you're going to be bullish, gold and silver, keep an eye on those key levels that Ian highlighted. If you're going to be bearish, also keep an eye on those levels that Ian highlighted, and keep an eye, obviously, as always, on the dollar and rates, and hope that they come down so that we can see some more risk on behavior in markets. And that's the takeaway. We'll be back on Friday. By the way, new time for the show. We used to do the show at 11:30 a.m. Eastern. Now we do it at 12:30 p.m. Eastern time. We'll do that going forward. But if you have any questions about anything as it pertains to gold, as it pertains to silver, any commodity, anything about bonds, anything about Forex or currencies, email us at the email on the screen. It's questions@stockmarketmedia.com. We will take all those questions. We will get answers for you on our next show this coming Friday. If you want more from Ian, obviously you can check out the links in the description. His link to his blog is there. The link to his research is there as well at All Star Charts Premium. You can get that there. And I think that's what I got. Any final thoughts?
Get out, enjoy the weather. Starting to cool down. It's beautiful. It's beautiful
it's
down
perfect,
here right now.
It's that perfect fall weather right now. So yes, this is arguably the best time of the year for weather, in my opinion. All right, everyone. Hit the like, please, and thank you. Would appreciate that. And we'll catch you guys on Friday. Have a good one.
Thanks for watching.